Guys, this is MoneyPigTrading. Today we're going to talk about Zoom, whether it's going to be included at SP500 in January 2021, and how to make 100% 1,000% from this trade. So we're actually starting to see some news in MarketWatch and Benzinga.com, which is one of the major trading news source, that Zoom is going to be included into SP500 in January 2021. Actually, this specific report is saying that January 15, 2020 is the day. Today is January 20th, so apparently it didn't happen. So yeah, we're going to discuss whether it will happen and when it will happen and how to make a trade. So if you don't have time, just a quick recap. We do think it's going to be included in some point in 2021. Time is not very certain, but we think it's going to be in Q1 and Q2 in 2021. And you can try to loan Zoom stock. We'll have about 40 to 60% of upside from today's price, which is at $380 per share. Or you can try to do some Zoom call options to maximize your revenues. Yeah, if you don't have time, you can drop off here. We're just going to provide some more details down the road. So why S&P 500 inclusion matters? Because once it's included, mutual funds and ETF which track S&P 500 as a benchmarking index, they will have to buy the stock, here is Zoom, to meet the benchmarking requirements. So that will create a lot of demands on Zoom or the underlying stock that's going to be included, and then push out the price a lot. So for example, in this case, the most famous case is Tesla right now, that on November 16 or 17, 2020, S&P 500, S&P announced that they're going to include Tesla into S&P 500, and overnight Tesla just gap out from 410 to 460, and then actually Tesla got included into S&P 500 on December 18. You can see how much Tesla run up, actually run up 69% from the time S&P announced that it's going to be included to the time it's actually being included, from $410 a share to $695 a share. So in total, 69% of the upside, and we definitely don't want to miss. And we actually make a lot of revenues on this Tesla trade. And again, we don't want to miss the same opportunity for Zoom, since it's a pretty big valuation name, and the same as Tesla, so we're expecting it could have a really big price effect. Zoom as well, the same as Tesla. So what are the S&P 500 inclusion criteria and process? So it's totally determined by the S&P committee. They have a meeting once, we don't know how frequent the meetings is. We're contacting S&P, trying to see if we can get a schedule, couldn't find a schedule on their website as well. And on their website, I actually provide the link here, and also provided on the YouTube in the comment section, that here are the 4 major criteria. First, the company has to be in a U.S. company, and also have to be a market cap of at least $9.8 billion. So Zoom currently is valued at $150 billion, so it's totally qualified. And the name that's going to be included has to be highly liquid, have a public float of at least 10% of the share outstanding, which Zoom qualify as well. And the most recent quarter's earning and the sum of its trailing 4 consecutive quarters earning must be positive. So I just listed the last 4 earnings in 2020 for Zoom. The earning per share is all positive. So Zoom actually meet all the criteria for S&P to include it into S&P 500. So right now, my personal opinion is totally under the discretion of S&P committee whether they are going to include it or not. So the question is now just when. So S&P 500 inclusion is always announced at 5:15 p.m. Eastern time during the weekday. It won't happen during the weekend. In the past 4 years, based on some of our in-house research, 45% of the announcement actually occurred on Monday and Friday. Tuesday is the least likely one, while Monday and Friday are the most likely one. On average, the announcement actually happened 45 days after the company's last earning. And the longest record is WAB, It actually was announced 114 days after their last earning, which qualified WAB to be included. So the last Zoom earning is November 30th, 2020. The next one is March 4, 2021. So if we calculate based on the average of the historical data, which is 45 days, plus November 30th, 2020, we do think Zoom is going to be included into S&P 500, at least being announced on January 15, 2021, which didn't happen. If we consider the longest case WAB 114 days case, and plus November 30th, it will give us a date of March 24. So if S&P committee is considering Zoom based on the November 30th earning, we do think anytime between January 15, 2021 to March 24, 2021 are highly likely that they will announce Zoom will be included into S&P 500, which will potentially create a massive upside for Zoom. However, there's a possibility that the S&P committee might consider like, okay, we want to watch Zoom for another quarter. So that will be March 4. And after March 4 earning, it's still showing positive earning, which we believe it will, because the remote workforce is a trend. And looking at all the remote workforce earning, the latest one is Logitech, LOGI, has a super strong earning, positive EPS, good cash flow, blah, blah, blah. And we believe there was some case for Zoom based on the Logi earning, which got released this week. So assuming Zoom performed very well on March 4 and S&P 500 hasn't announced the inclusion of Zoom into their index before March 4, I'm still expecting S&P 500 will make a decision like after 1 or 2 months after, or for 45 days, which is around May timeframe, after May 4th Zoom earning. So I think most likely it's going to be anytime before March 24, 2021, but also can be as prolonged as May 2021. We can take a look at Tesla's case example. So Tesla is actually qualified for S&P 500 inclusion after the July 22nd earning in 2020. And Tesla actually had the rumor of S&P 500 inclusion rumor since August 2020. But actually S&P announced it only on November 16, 2020 that after the Tesla earning on October 21st, that okay, Tesla is qualified to be included into S&P 500. So we're gonna include Tesla, and the actual inclusion again happened on December 18. So just to sum up, based on the Tesla case and based on all the criteria and the historical data, we do think the most likely time frame for Zoom to be included is January 15, anytime from today, to March 24. But it's also possible that it could be prolonged to May, perhaps June, but anytime from today to May are highly likely. And there are actually several signs of S&P inclusion for Zoom. We know this ARKW, which is the ARK Fund, very famous ARK Fund, the ETF, for innovative web invention, has been adding Zoom since December 20th, December 2020. I think it's the last week of December, last week and the first week of January. Each week we see ARKW adding a bunch of Zoom, and now Zoom has been their 15th largest holding, which consists of 2% of the ARKW. And also we noticed that institutes actually got in 100 million worth of Zoom call options in last week, in the week of January 11, 2021. And institute actually got in $150 million worth of Zoom stocks last week, in the week of January 11, 2021 as well. So I'm guessing everyone, not only just us, not a crazy random internet dude like just calling out Zoom, but I think a lot of money and institute are actually speculating that Zoom is going to be included into S&P 500 some point around January 15. I saw some Reddit posts, some people are circulating that's going to be at the end of January. But like I said, I think anytime from today to May are highly likely, just really hard to guess when. So based on all this information, how can we make a trade and make it profitable? The easiest one is to long Zoom stocks. It's really hard to estimate how much price action is going to bring based on the S&P 500 inclusion. In our weekly email, we analyze Tesla based on the Berkshire and some other historical data. It's actually quite complex analysis. Here, just looking at a chart, I can provide some quick insights. Here, the Zoom chart. Based on yesterday, I know today Zoom actually, for some reason, just pulled back from 400 to 380. Someone just unloads Zoom for unknown reasons. But basically, this is the Zoom daily chart. You can see it's actually breaking the downtrend and holding the EMA support. And the TDM squeeze is showing us it's going to turn into a bullish trend very soon, as long as we can hold this EMA support. If we can reclaim 400, we have 426, 447, 478 next. Based on the Tesla experience, if Tesla move out 69%, about a similar market cap, Zoom perhaps, I mean, when I say similar, I mean it's the same range, like a couple $100 billion range valuation. Perhaps Zoom will also have the same price effect, move up about 70%, which will make it to around all-time high, 588. So I would guess, and also the latest S&P inclusion is EMPH. And it actually moved that stock up about 33%, if I remember correctly. So there's a big wide variety of the price effect on S&P inclusion. So we can do some technical analysis. We can actually do a lot of hedging power and also do the index analysis to see how much ETF will have to buy Zoom to match the index, blah, 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 which I won't provide details, but we'll provide more details to the members. But based on the guesstimate or the historical data, I do think Zoom should at least run into $478 to a $500 level, which will make about 40 to 50% of the return. About 25 to 30% of a return. The other way is to use options. Option will provide maximum gains, even though it's way more risky. Here are just some two ideas about the Zoom. The first one is to buy naked call, which is more risky, but the return will be maximized because once you get into a call option, if Zoom stock price is way above your call options, is called in the money option, which each $1 of shares Zoom go up in the stock price, you will make $100 in each of your option contract, right? So if Zoom goes up, I don't know, $100 a share, you have one contract in the money, then you are going to make $10,000 each contract, which is a lot. If you have 10 contracts, you are going to make like $100,000. But the problem with the naked call options is the decay is usually pretty bad, especially for shorter dated contracts. And here, because we don't know when Zoom is going to be included, and Zoom option contracts are very expensive right now. So if you don't want to spend like a couple $1,000s on each option contracts, you have to buy like weekly expiration contract. That means the contract is probably going to expire within a week or two. We call it shorter dated contract, which the decay can be really bad. And also the contract price can also be very, very volatile compared to a longer dated contract. The benefit of a naked call is you don't really need a margin account. You can use a cash account. You're not subject to pattern day trading. Here's just one example. March 21st, 2021, 430 call options is priced at $32 per contract, meaning this contract is one contract costs $3,200 US dollars because each contract has 100 units, so that's why you have to multiply by 100. The profit can be unlimited. If Zoom go to $500, this contract is going to be perhaps $64 per contract. So you're going to make $3,200 per contract. The return is 100%. The reason we're choosing March because this is we call it a speculative trade. It's not a core trading where we really like a stock. We think it has a long-term investment potential. But to maximize the gains, instead we use options for swing trading to capture the momentum and make a couple hundred, a couple thousand%, right? Because if we do the stock, you'll probably only get 30, 40%. But if you use option, you get in the right time, you have the right strategy. Oftentimes, we're doing multiple times throughout the year that we can get a couple hundred to a couple thousand%. That's why we're trying to use options. And the reason we choose March is because Zoom has an earning on March, I forgot, 4 or 15. That's in the previous slide. So we do think Zoom's going to have a good earning, and we think it's a solid stock. Remote workforce is inevitable. Based on the logic earning, Zoom should have a good earning. So that's why we not only want to bet on, like when Zoom is going to be included in the S&P 500, we also want to bake into, okay, Zoom's going to have a good earning. We think Zoom from today to the earning or post earning in March is going to have a nice momentum move. So that's why we try to buy a more expensive option contract all the way to March, so that we not only just speculate when Zoom is going to be included into S&P 500, which is kind of like gambling, right? Because it's really hard to guess. It's totally up to the S&P 500 committee. There's other safer way to buy the option is use a way called vertical call bull spread. The return is limited, but it's still pretty awesome. The benefit of this vertical bull call spread is also, it will also have less decay and less volatility usually, unless the underlying stock is very, very volatile. So it will have less decay and less volatility compared to the naked call options. However, there's a downside for if you want to buy a vertical call bull spread or a vertical spread, sometimes it's called that way, is you do require a margin account and the level 2, level 3 option permission, which you have to contact your stockbroker for more details. But I know if this margin account you have less than $25,000, you'll be subject to pattern day trading. So what I advise our swing trading member, and I would advise everyone, even though we're not financial advisor, but yeah, just personal opinion, that what you can do is open a small account, let's say $2,000, $1,000, or even $500, and make it as a margin, elect it as a margin account, apply for option 2, 3 permission, level 2 or 3 permission. And then you just do swing trading. You don't take out position in and out. And you can have multiple accounts, especially like TDM Trade, ThinkorSwim. It's really easy to link and have multiple accounts linked together, make the daily option very easy. And you can have a particular small account just for margin. And then, yeah, you can do this more complex option strategies, which can improve your winning rate, reduce your risk exposure, and at the meantime, not being subject to pattern day trading. So in this case, we're looking at March 21st, 2021, 430, 450 vertical call spread. So the way to look at this is we actually have 2 legs in this option contract. The one is 430, which is a long naked call. And at the same time, we sell 450 calls, which is a more out of money calls. We sell it. So by doing this, you have 2 option contracts being purchased together and sold together, will provide a good cushion. So in this case, the contract price is way cheaper than a naked call, where a 430 call is $32 per contract, which again translates into $3,200 actually if you want to buy it. Here, to buy this vertical call spread, you only need to pay $4.55. Which translate into the real dollar is $455 per contract, which is like almost 8 times cheaper, right? However, the profit here won't be unlimited compared to the naked call. When the stock price going up, the naked call will just continue to keep going up. This vertical call bull spread, on the other hand, will have a cap maximum profit at $20 per contract, which is determined by the higher number of the strike minus the lower number of strike, which is 450 minus 430, which means if Zoom price theoretically goes up to $450 or above, your contract will be worth at $20 per contract, which will give you $15.45 per contract revenue, which again, you have to multiply by 100. Each contract you're going to make about $1,500. That's 339% upside. So if we're expecting Zoom is going to be included into S&P 500 in Q1 and or have a good earning in March, right? We are expecting Zoom to be at least pushing to 479 as we show in the previous technical chart. In that case, if Zoom got pushed into 479, this March 21, 430, 450 vertical cobalt spread should have the maximum price at $20 per contract, which will give us 339% again. This way, again, vertical cobalt spread will provide a more flexible, safer, less volatility decay, even though the profit is capped, but still decent kind of play. And that's why in the swing trading, this is one of the major positions we're holding for Zoom. SP 500 Inclusion played, and also the earning play. Again, we have to be careful because Zoom is a very volatile name. We call it widow maker. Today we just see Zoom for some reason. There's no headline, just dropped from $400 a share to $380. So if you want to play Zoom, that's the other reason we use vertical cobalt spread. But again, it can still be very, very risky and tricky to play. We do things like names like Tesla, Zoom, Boeing, Roku, those big caps, very volatile, high beta names are usually the ones that are more difficult trade. So that's something you have to be aware of. And last and foremost, just want to highlight how to purchase a vertical cobalt spread, since a lot of members are asking. Before we go there, just want to mention that we are not registered financial advisors. So please take this as just some education purposes, and do your own due diligence, and before you make any trading decisions. So this is ThinkorSwim. If you go into, you type Zoom, if you want to buy stock, you just right click here, right? You can buy the stocks. That's pretty straightforward. And if you want to buy options, you have to go down. You will see this option chain. Here we're going to March 19. If you just want to buy a naked call, like we mentioned, 430 call, just go to the 430, and this is the call. And just right click on buy, and you can just click on single, and it will give you $26 per contract. So in this case, what is our contract? 430 to 450 vertical. So how you do in ThinkorSwim, I'm not sure about other brokers. You can contact them for more details. Is you click buy. Sorry, it's kind of being cut off. You right click buy on 430. It's still being cut off. Sorry. You right click buy, and then you go to the vertical, and it will show you two legs that I mentioned. And because we want to buy 430 into 450 vertical cobalt spread, so just choose 450. It will show you $5 per contract, and you will see here it will be one buy Zoom 430 naked call and one sell 450 calls, and this will give you the vertical cobalt spread. Just really quick, if you want to do a put bear spread, it's the same thing. You just do right click, do vertical on the put section, and what you will get is a bear put spread. If you have any question, feel free to leave a comment and reach out on Twitter or Google, YouTube here, and leave a comment. Here's just another example that we actually shouted out on January 14. We actually entered some naked calls. Zoom 500 at $2.45, and one day later Zoom just double. We actually make more than 100%, and we sell off half of our position at 5.4. Just a quick example and shout out our trade, and to show you like how profitable option could be. Of course, like the higher the rewards, the higher the risk. So that's one thing you have to consider. Last and foremost is to shout it out. We have a Discord server at MoneyPigTrading.com. If you'd like to check out, feel free to go there. We have 7-day trials and have a really clear and great track records in our trading performance, which I also include in the website. And feel free to follow us on Twitter, YouTube, and Instagram, all MoneyPig Trading. And don't forget to like this video. Thank you for watching.